from a top-down perspective, central banks will be centre stage in the coming week. The US Federal Reserve, the Bank of England and the Bank of Japan are all due to offer their latest policy pronouncements, and they're scheduled to do so on Wednesday the 17th, Thursday the 18th and Friday the 19th of March respectively. Just to remind you of their current positions, the US Federal Reserve has held the upper band of the Fed funds rate at a record low of 0.25% since March 2020, and it's running a quantitative easing or QE program that comes to $120 billion a month. As a result of that, the Fed's balance sheet currently holds $7.6 trillion of assets, 78% more than a year ago. The Bank of England has held its headline interest rate at a record low of 0.1% since March 2020, while it took its total QE scheme to £895 billion last November. Talk of a move to negative interest rates has gone a little bit quieter, but if the economy does not bounce back quickly from the pandemic, then it seems nothing can be ruled out. The Bank of Japan has held its interest rate at a record low of minus 0.1% since February 2016, and it continues to run not just a QE scheme, but a QQE plan, quantitative and qualitative easing, whereby the BOJ buys government bonds to cap the yield on the 10-year paper at 0.1%. Intriguingly, the yield on that 10-year Japanese government bond, or JGB, has just crept above that mark for the first time since late 2018. So, the key issue that investors will want the trio of central banks to address is inflation. Central bankers currently seem willing to let their economies and inflation run hot, thanks to vaccination programs, fiscal stimulus and monetary stimulus. As a result, benchmark 10-year bond yields are creeping higher. If inflation really is going to make a comeback, that would be a huge change from the last 40 years or so. But we've had many false starts here, and central bankers may choose to look through any increase this year as transitory, thanks to the low base set by the pandemic hit year of 2020 and also that year's collapse in the oil price. Economists and investors will pore all over the three central bank statements for any hint of what might come next in terms of policy, because there's a balancing act here between keeping things going as lockdowns ease and boosting long-term growth on one hand, and not letting inflation or financial markets run too hot and bubbly on the other. There'll be a lot of company news to study in the coming week as well, as results and trading statements continue to come thick and fast. Names which may be worthy of note and further research include the following, although some of these dates could be subject to change. Essential on Monday the 15th of March. Ferguson, TI Fluid Systems, Greggs and Bakkavor on the 16th. Capita and Ferexpo on the 17th. Ocado, Fever Tree Drinks and OSB, or One Savings Bank as was, on the 18th. And to close out the week, JD Wetherspoon and Carnival on Friday the 19th of March. However, the stock which could just cause the biggest fuss in the coming week is Antofagasta. The copper miner and FTSE 100 member scheduled to release its full year results for 2020 on Tuesday the 16th of March. Antofagasta shares are up by more than 120% in the past 12 months, which in some ways seems a bit remarkable given the difficult economic backdrop. However, the copper price is up by nearly 60%, and I guess that informs a lot of Antofagasta's rise. And copper's always interesting. It's ductile, malleable, and used in so many industries from construction to car making that it's seen as a proxy for the health of the global economy, hence the nickname Dr. Copper. Some of the enthusiasm for copper could be also because electric vehicles need more of the stuff than normal autos, but the metal's price strength can be seen, perhaps, as a good sign for the global economy. In terms of Antofagasta more specifically, shareholders will home in on three sets of figures. The first is output. January's trading statement revealed 2020 production was just under 734,000 tonnes of copper at $1.14 a pound. Management also gave guidance for 2021 of output of between 730 and 760,000 tonnes at a net cash cost of production of $1.25 a pound. Attention will focus on whether there are also any changes to that guidance for the new calendar year. The second figure is profit. As is the case with most miners, Antofagasta's preferred profit metric is earnings before interest, taxes, depreciation and amortization, or EBITDA. For 2020, the year that's just gone, analysts expect EBITDA to rise by 8% to $2.6 billion, as lower costs and higher prices offset lower production. For 2021, the current consensus forecast is for EBITDA of $3.6 billion, a 38% increase. And the third and final figure to note is the dividend. Antofagasta cut its interim payment by just over 40% to 6.2 US cents a share. And for the full year, analysts are looking for a total of 31 cents. That implies a hefty year-on-year increase in the second half, thanks in part to copper's recovery. Management has a minimum target payout ratio of 35% of underlying earnings per share going forward. I hope that you and your families are all in good health and good spirits during these difficult times. Thank you for listening, and I look forward to talking to you again next week.